Anil Jain, MD and CEO at Time Technoplast, joining us on the show right now. Anil, hi, morning. Thanks much for taking the time out and joining in. Just help us understand what the business prospects are and how Q3 was for you.
As you have now seen our Q3 results, they are a lot better than what they were in Q2. Of course, the Q2 was probably the most difficult quarter that we had in a long time. We have come up from there. From EBITDA margins have moved from 13% to almost about 14.5%. It's still lower than what we would expect in Q4, but that's, I think, because of the product mix and also the carryover effect from Q2. But otherwise, the business is actually growing. We have seen the volume and value growth in excess of 15%. Probably Q4 is always the best quarter for us, so we will make up for what we probably lost in Q2. In each of these segments, both mostly for the value-add products, we are seeing a good growth in excess of 20%, and I think that will continue in the next quarter as well. For the regular business also, we are seeing a growth in excess of 13.5% or thereabout. The EBITDAs are getting better, and I think it will all reflect upon our overall performance at the end of the year. Yeah.
Right. What is the revenue pie looking like, and do polymer products still constitute to about 70% of your revenues?
Yes, the product between the composites and the polymer product is remaining the same, but of course both the segments are growing because we have some growth drivers in each of these segments. I think product mix will be the same, yes, at the end of the year.
All right. Let's get in a sense as to what the outlook is on your volume growth. It's been a 15% growth this time around in Q3. What are you penciling in going forward, and what do you believe will be the driver of your volumes?
I think the volume growth, considering the fact that the polymer prices have remained more or less stable, and I think they are getting a bit more stable now in this quarter than the next one. The volume and the value growth will be around the same, that is 15%. I think the growth drivers clearly are the value-add products that we had introduced about a year or 2 years ago. MOX film is doing pretty well. We have seen in 9 months growth of about 100%. Of course, the base has been very small. The PE pipe business is doing pretty well in this year. We are looking at about 60% growth in that segment as well. Composite cylinders are also seeing a growth of about 20%. Yes, and our other industrial packaging business, which is our legacy business, will still see a growth of about 12 or 13%. So I think overall 15% growth is quite achievable. The value-add businesses, like I said, are about 20% of the total business now, and they are growing at 20%. That's the area where we have relatively better EBITDA margins in excess of about 18.5% as against 13.5% in our regular business. So I guess as these value-add businesses grow, they will reflect upon better EBITDA margins, aggregate EBITDA margins, yes.
Okay. Just wanted to understand what really is the status with Aburi regarding the FIR that they had filed?
Well, that has been withdrawn by them. Actually, they realized that it was a mistake on their part. They have withdrawn the complaint, and the EOW is in the process of quashing the FIR. That's what we heard. But of course, we had also withdrawn the cases that we had filed against them for the defamation. So I guess everything is fine. But the interesting thing is that we are now getting big order from them. We already got the first one, and they have a plan to buy close to about 500,000 cylinders in 2019, and probably even more in the next years. So it's back to normal, back to business, and we are very excited about that relationship, yes.
Your current order book like, and if you could just highlight what the pipeline is looking like as well?
Well, of course, we have got the order book, which is segment-wise. In PE pipes, we have probably about 8 months order book. In cylinders, we have more or less about half a year or even more. PE business, the industrial packaging business is on a call-up basis. But as we go into the next year, I think we'll be having a stronger order book than we had in the beginning of this year. I think the business is really picking up.
And will your revenue mix be largely driven from the polymer product segment? And can you give us some sort of a guidance on your margins? Do you think that they will, see an uptick from the current 14.5%?
Yes, we are expecting the better EBITDA margins in Q4, so therefore the aggregate EBITDA margin for the year will improve. Like I said, we are looking at a growth of about 15%, and that will be agnostic to the segment. I think we'll have same growth in polymer and composite businesses because, like I said, we have growth drivers in each of these segments. We probably will be, in the EBITDA margins will be upward of 15%, that's what we had projected. We have a projection for FY19. I think we should be very close to what we had projected. I don't see really a major deviation at all.
All right, thanks very much for giving us a heads up as to how things have shaped up, as well as the outlook on volumes, margins and financials.